In today's video, I'm going to show you how to understand an accounting equation where many of us confuses between the debit and the credit side. And whenever that we have to do the debiting and the crediting. So this video is for students who are working with Accounting 101 or Introduction to Financial Accounting. Okay, let's get started. When you study accounting, one of the most popular equation and most printable equation that you have to learn and understand is the balance sheet equations, right? Because every activities and business activities and stakes that you're working with are documented and recorded in the balance sheet. Money flows in and out of the balance sheet, get retained in the end. Okay, so the first item is the asset, and it's equal to liability plus equity. Now, when you start a business, the asset of your business is the combination of the money that you borrow, which is the liability, and the money that you use from your own, like money that literally pulling out of your pocket. So that's the equity. So money that you own is equity, money that you borrow is liability. All combined together generate an asset of your business to get it going. Okay. So when you are in accounting, your asset is consist of cash, okay, have receivable, can be inventory, can be land, machine, and equipment. So these are accounting accounts. Okay. So accounting accounts represent whatever that the tangible asset, sometimes intangible, which call copyright, in your business that representing how big it is. Okay. Now these assets also form in terms of how much the liability and equity represent. We also have accounts for liability, which include accounts payable, note payable, short-term debt, and long-term debt. The money that you pay. Short-term debt is the money that you're obligated to pay within a year. Long-term is the money that you can pay it over more than a year. You also have something wage payable, which is the money you owe to employees. For accounts payable is the money that you owe to vendors. Now we also have the account for equity, right? So the account of equity will include common stock. We also have the retained earnings, the money that you decide to keep within your business and not taking it out. So we call it retained earnings. We also have the revenue that you're generated. If you're the business, you make sales, either product or service, you will generate some revenue. And you have expenses. And you also have dividends, the money that you take out from the business. These are all accounting accounts under your accounting equations, asset, liability, and equity. Now, in accounting, you also run into the concept of a debit and a credit. Because accounting is the double entry bookkeeping, it must have a debit side and the credit side. So in this equation, your debit side is the asset. Okay, on the left, whatever is on the left-hand side is the debit. Okay, separation by the equal sign. Two items on the right-hand side, the liability and the equity, are the credit side. Now, why is it important? The reason is because we have to know when the money coming which side, and then we have to deposit the money on the other side of the equations. In order to increase the asset, since the asset is debit account, to increase the asset, we are debiting the account. To reduce the asset, we have to credit them. So debit the debit, increase the asset, credit decrease the asset. Now, with liabilities, it's going to work in reverse. To increase liability, because liability is the credit account, you have to credit the credit. So that's why you feel like why accounts payable increase by crediting them, because it's a credit balance. To decrease the liability, we have to debit the credit. Same with equity. To increase equity, we have to credit our equity. And to decrease equity, we have to debit. Now, there's one small rules in equity accounts, which I call it the Contra equity, in which there are the expenses and the dividends, which are negative. When you make some money, which is revenue, you retain your money in terms of retained earning, or you put money into the business common stock. Those are regular accounts. They don't have a negative sign in front. But for expenses, they have a negative sign. So it's a contra equity. To increase the expense, we don't credit the expenses, but we have to debit them. So it gets treated like on the left-hand side of the accounting equation, like the asset side. To increase the expense, we debit, and to decrease the expense, we credit. Okay. Same with dividend. To increase the dividend, we debit, not credit. To decrease the dividend, we credit. Those are the rules of the accounting equations in terms of left-hand side asset, right-hand side liability, equity in terms of debit and credit. So let's do one example. Let's say I decide to start a business. I'm going to put some money into the business in terms of cash. Okay, what do? In accounting, we have a thing that is called journal entry. It's like a journaling where you record the activity within the business. If I decide to put money in the business, I have to look at the accounting equation and see where the money goes. The first thing is if I put the money in the business, I know that it's going to get in started with the equity, right? Because I'm not borrowing any money at the moment. So I don't worry about the liability. I'll worry about the equity. Which account of the equities that I'm going to put in often is a common stock. I'm not doing any business yet. I'm just putting the money in. So it is form of common stock. If it's a corporation, that's where you raise equity. But in a regular business, it's also known as owner contribution. Because equity is a credit side, right? So if I want to put money into the equity, I'm crediting that part. Now, where does that money also get recorded? Since accounting is a double entry bookkeeping, I put it in cash, right? And cash is the debit side. So I have to debit the part of the asset. So now I have an idea of where the accounts are and need to write it down in terms of the journal entries rule. I have to debit cash. And I'm going to put the money amount here. So let's say that I put around like $100 and then I credit equity. Okay, so yeah, let's keep this simple. $100 on the asset, $100 on the equity. This is the debit side and this is the credit side. Okay, so that's how you complete an accounting journal entry bookkeeping. Okay, that's a simple exercise for today. If you have more questions, feel free to subscribe and I'll give you more videos like this in the future. Take care.